Welcome back to FX Limit. Today, we're diving into the top 5 technical analysis mistakes that many Forex traders make and, more importantly, how you can avoid them. Whether you're new to trading or a seasoned veteran, these are some of the key pitfalls that can drain your account and your confidence. So grab your notepad, because this is going to be a game changer for your trading journey. Mistake number 1. Ignoring the bigger picture. One of the most common mistakes traders make is focusing too much on short-term timeframes. You might be zoomed in on a 5-minute chart trying to catch every small price movement, but without understanding the larger trend, you could be setting yourself up for failure. Always keep an eye on higher timeframes, like the H1 or H4 charts. This will give you a better idea of the overall market direction. For instance, if you're seeing an uptrend on the 4-hour chart but trying to short the market on the 15-minute, you're fighting against the trend. Remember, the trend is your friend. And to make things even easier, tools like the Apex Trend Indicator provide visual trend detection, helping you to quickly spot whether the market is in an uptrend or downtrend. It's like having a bird's eye view of the market at all times. Mistake number 2. Overcomplicating your chart. Another big mistake is cluttering your chart with too many indicators. While it's tempting to use every tool at your disposal, having too many indicators can lead to analysis paralysis. When your chart looks like a rainbow of lines, it's easy to lose sight of the actual price action, which should always be your primary focus. Instead, try to simplify your chart setup. You really only need a few reliable indicators to make informed decisions. The Apex Trend Indicator, for example, combines multiple key functions into one tool: trend direction, entry and exit signals, and even take profit and stop loss alerts. This way, you keep your chart clean and your mind clear. Less is more when it comes to technical analysis. Mistake number 3. Chasing the market. Ever found yourself jumping into a trade because you felt like you were missing out? That's called FOMO, or the fear of missing out, and it's a major account killer. Chasing the market after a move has already happened is one of the fastest ways to lose money. Patience is key in trading. Wait for the market to come to you instead of jumping in just because a price is moving fast. Stick to your trading plan, and only enter trades when your criteria are met. For example, with the Apex Trend Indicator, you'll get non-repainting buy and sell signals that tell you exactly when to enter a trade, reducing the need for impulsive decisions. You'll know that the signals are based on solid market data and analysis. Mistake number 4. Failing to manage risk. Risk management is one of the most crucial aspects of trading that often gets overlooked. You can have the best strategy in the world, but if you're risking too much on each trade, you'll eventually wipe out your account. A good rule of thumb is to never risk more than 1–2% of your trading capital on a single trade. Also, always use stop losses. And not just any stop loss, use one that makes sense based on the market conditions. The Apex Trend Indicator helps with this by providing dynamic stop loss levels based on support and resistance, or the ATR multiplier. This means your stop loss adapts to the market's volatility, protecting you from large, unexpected moves. And trust me, you don't want to be caught in a trade without a proper exit strategy. Mistake number 5. Ignoring news and fundamental analysis. Technical analysis is great, but it's not the only thing that drives the Forex market. Many traders make the mistake of ignoring fundamental factors like economic news, central bank decisions, and geopolitical events. These can cause massive price swings that technical analysis alone can't predict. Before entering a trade, make sure you check the economic calendar for major events that could affect the currency pair you're trading. This is especially important if you're trading during periods of high volatility. And while the Apex Trend Indicator excels in technical analysis, it's always a good idea to be aware of the bigger picture by combining both technical and fundamental analysis in your strategy. Conclusion. To wrap things up, let's quickly recap the top 5 mistakes to avoid. Ignoring the bigger picture, overcomplicating your charts, chasing the market, failing to manage risk, and ignoring fundamental analysis. By avoiding these common traps, you'll be well on your way to becoming a more successful trader. And don't forget, if you're looking for a tool that simplifies your analysis and gives you clear, actionable signals, The apex trend indicator from FX Limit can be a powerful addition to your trading arsenal. It takes the guesswork out of identifying trends, helps you stay on the right side of the market, and keeps your risk under control with smart stop loss and take profit settings. If you found this video helpful, don't forget to like, subscribe, and hit that notification bell so you never miss an update. Stay tuned for more trading tips and strategies from FX Limit, and until next time, happy trading.